Have you ever walked into a central bank? Do you know who runs them? If you ask most people what a central bank actually does, you'll probably get a blank stare. Yet, whether you understand it or not, this one institution decides how expensive your money will be tomorrow. It influences whether your economy booms or busts. It sets the hidden cost behind your mortgage, your salary, your debt, even your dreams. Central banks can literally create money with a single decision or erase wealth faster than any market crash. And the strangest part? The people affected the most by their actions have the least control over them. Today, we are diving into how central banks grew from obscure institutions into the architects of our entire financial world. They aren't just quiet referees. They're active players in a game they secretly built. Once you see where this power truly came from, you'll never look at your savings, your paycheck, or your future the same way again. Let's go back to the beginning. In 1694, England was drowning in war debt. The treasury was empty, the government was desperate, and the crown needed money, fast. A group of wealthy merchants stepped up with an offer. They'd de-lend the government £1.2 million. But only if they were allowed to create a bank with the exclusive right to issue paper money. The government, with no other options, agreed. And just like that, the Bank of England was born. Its purpose wasn't to protect citizens. It was to fund the state. That was the original blueprint for a central bank. A private lender to the government, backed by the promise of future taxes, with the power to profit from the nation's debt. Over the next century, that power didn't shrink, it expanded. By the 1800s, Europe's central banks were powerful, privately influenced institutions with special rights. They printed the currency, they controlled the reserves, and they stood behind governments during financial panics. In return, they quietly shaped economic policy, often with zero democratic oversight. But the story in the United States was very different. From the start, Americans deeply distrusted concentrated financial power. The first and second banks of the United States were both shut down after fierce political battles. For decades, the American financial system was a chaotic free-for-all of private money, constant bank failures, and frequent panics. Then came the Panic of 1907, a financial meltdown so severe that a single private banker, J.P. Morgan, had to step in and personally organize a rescue of the entire system. That crisis shattered the resistance. In 1913, the Federal Reserve System was created. It was pitched to the public as a decentralized network designed to stabilize the economy. In reality, it would become one of the most influential institutions on Earth, with total control over interest rates, credit, and the supply of money itself. But here's where the story gets a lot less transparent. The Federal Reserve isn't a traditional government agency. It's a strange hybrid independent, yet deeply intertwined with the private banking sector. Its leaders are appointed by politicians, but its financial engine runs on interest earned from government debt and fees collected from private banks. It doesn't run on your taxes. It runs on the very economic system it oversees. And because its most important decisions happen behind closed doors, the public rarely understands just how much power it truly holds. So the real question is, who does a central bank actually serve? Officially, the Federal Reserve has two jobs: keep prices stable and support maximum employment. But in practice, its actions often end up shielding the very same institutions that dominate global finance. Think back to 2008. The Fed didn't just cut interest rates. It unleashed trillions of dollars into the financial system, bailed out massive investment banks, propped up collapsing assets, and kept credit flowing even when the markets were completely frozen. Then in 2020, it happened all over again, but on an even bigger scale. The Fed started buying corporate bonds, injected unimaginable liquidity, and helped inflate asset prices to prevent a total economic meltdown. As a result, stocks soared and asset owners became richer than ever. Meanwhile, millions of ordinary people faced unemployment, shutdowns, and a rising cost of living. This is the uncomfortable truth. Central banks don't just monitor the economy, they actively shape it. They decide who gets access to cheap credit. They influence which industries survive and which ones fail. They can pump up markets or bring them crashing down with a single press conference. When interest rates fall, assets boom. When they rise, borrowing becomes a heavy burden. And that ripple effect touches every single household. For decades, central banks have been given more power and more independence than ever before in history. Low interest rates became the new normal. Quantitative easing, a policy once considered unthinkable, became a routine tool. Central banks purchased government bonds, corporate debt, and mortgage-backed securities on a scale nobody could have imagined. The result? A world where asset prices skyrocket, housing becomes unaffordable for an entire generation, and the cost of living rises much faster than wages. People blame politicians, corporations, or just bad luck, but they rarely look at the quiet financial engine running behind the scenes. That's because most people are never taught how the system actually works. They don't realize that their student loan interest rate, their savings account yield, and the price of their house can all be traced back to decisions made in boardrooms filled with unelected economists, not voters. So who really controls central banks? Officially, they are independent. Unofficially, they are deeply interconnected with the financial system itself. It's common for leaders to rotate between jobs at central banks and major investment firms. And time again, their policy decisions seem to align perfectly with market interests. The language they use in official statements is deliberately complex, not to inform the public, but to discourage you from asking too many questions. But once you strip away that complexity, the pattern becomes crystal clear. Central banks protect the system first, and the system, in turn, protects itself. When crises happen, they rescue financial institutions. They stabilize the markets. They defend the architecture of the financial world, not the individual citizens living in it. And yet, these decisions define the landscape you live in. They shape what you can afford. They determine how far your money goes. They influence wealth creation and wealth inequality. Here is the reality most people never confront. When a central bank manages the cost of money, it manages the cost of your life. It can make saving feel pointless. It can make borrowing feel necessary. It can fuel bubbles that reward a tiny few, and then create crashes that punish everyone else. This doesn't mean central bankers are villains. It means they operate within a system designed to preserve stability even if that stability benefits Wall Street more than Main Street. You can't vote on their decisions. You can't opt out of their influence. But you can understand the system and learn to step outside its traps. That means diversifying your assets. It means reducing your dependence on debt. It means building income streams that don't collapse when interest rates change. It means owning real things that central banks can't print out of thin air. It means learning how money truly works. Because once you understand the rules of the game, you stop being controlled by them. Central banks are not gods. They are players. Extremely powerful players, yes, but still just players inside a system that was designed long before you were born. The more you learn, the more you see. The financial world isn't random, it's engineered. And knowing how it works is the first step to protecting yourself. History doesn't repeat itself, but if you misunderstand the system, it will keep repeating its lessons until you finally pay attention. If this video gave you some clarity, hit that subscribe button. Here at Legacy of Money, we show you how the financial world really works so you can rise above it.